know statistics, you know stochastic volatility, and you lived it in Zimbabwe with your currency. Do you have a currency in control as a symbol of your nation?
At the moment, we have a multi-currency regime, which is anchored on the US dollar. Over time, we'll move back to a domestic currency, but that requires certain steps around fiscal consolidation on the government expenditure and revenue front, but also monetary policy consolidation in terms of the building blocks for full monetary policy, but also in engaging our international partners in terms of arrears clearance on our international debt.
Argentina is not Zimbabwe. We spoke a few weeks ago with Steve Hanke of Johns Hopkins, who has been critical of the Zimbabwe regime and how you're moving towards a quasi-currency he would criticize respectfully. Tell Argentina now and other EM currencies the Zimbabwe lesson of a best practice in currency stability.
Well, every country needs a stable currency, a credible currency, a currency that investors can rely on. The Zimbabwe experience has been a transitory experience, all building towards a stable currency that will be issued in future. Argentina has been impacted by the whole emerging markets, volatility, being driven by hardening monetary policy globally, obviously mainly driven by the US. Turkey has been impacted. South Africa, in terms of the rand, has also been impacted. So you have a slew of different factors impacting these global emerging markets, and not quite Zimbabwe. Zimbabwe's volatility has been driven by internal factors, but also some external factors. I must say that, of course, we're pleased with the way the gold price has held up. All the prices of all the other metals, such as chrome, such as platinum that we produce, have held up. But also we produce tobacco. So in terms of the global impact of global demand, we're benefiting from that much more than in Argentina and Turkey or South Africa.
Minister, of course, your country will continue to use, we understand, these bond notes and the multiple currency system until, you said, the economy stabilizes. Is there a time frame on when you're expecting that economy to stabilize?
There's no time frame as fast, but we need this to happen sooner rather than later. So we need certain triggers, such as, for instance, making sure that we have a full monetary policy committee that's working. We're able to move to a market-based allocation of foreign exchange. Investors can, those who are exporting can have foreign currency accounts and keep their receipts in dollars, and build those building blocks for full monetary policy. But also, as we build reserves, including gold reserves, have a sense of the import cover levels we need to issue a domestic currency safely and credibly.
Minister, how worrisome is the current cholera outbreak in Zimbabwe?
Oh yes, the cholera outbreak, we're containing that. We've so far raised $29 million, and we're raising more from our partners, from our, both internal and external, from corporates. We've even launched a crowd fund domestically, which international, our contributors have also contributed to. So I'm pleased so far with how this has progressed. We obviously need more resources, but the response has been phenomenal on the financing front, but also a response by government in making sure that we deal with this issue successfully.
Minister, let's have a question from Dr. Hooper of Deutsche Bank here for the Minister of Zimbabwe. Peter, a question, please.
Minister, as the Fed, as we were talking earlier about Fed raising rates, at what point are you concerned? Tom asked me what level of 10-year yield, what level of Fed funds would become a pressure point for emerging markets, your country in particular. If the Fed gets to 3.5%, is that worrisome to you?
That is worrisome, because it means that then capital would want to stay in the US dollar domain. Certainly hardening monetary policy, especially in the US, would be worrisome for us. We would want it to stay where it is. But also because we're using the US dollar as the currency of reference, it means that the dollar will strengthen even further, or most likely not weaken for sure. And that then hurts our competitiveness as a country in terms of exporters as they export their receipts. So a stronger dollar actually in a way is not good for Zimbabwe.
So to this point, as you noted, most of the issues in emerging markets is sort of idiosyncratic domestic issues. At what point does it become a contagion? Does it, because of dollar, because of Fed rate tightening? Is this, if Jay Powell, Chairman Powell, raises rates once a quarter between now and the end of next year, at some point along the way, is it middle of next year? Do you see this contagion beginning to creep up?
Certainly not on a small country like Zimbabwe, a $20 billion economy, but certainly it will impact the other emerging markets. The impact on Zimbabwe is going to be indirect through two channels. The first channel is the South Africa channel, because that is the Zimbabwe's largest trading partner. So what is negative for the South African economy will impact Zimbabwe in a way, because that's the partner. We need a South Africa that's growing strongly, and that's not in a recession. That's good for us. Number two is the commodity channel, which is because we're a large exporter. And so anything that has demand for commodities globally, via China and so forth, we won't be great for Zimbabwe.
Minister, this is right where I wanted to go. And the great theme of Bloomberg surveillance for the last year has been the broader concept of Eurasia and the idea of the Chinese continued expansion and investment in Africa. We all remember on Bloomberg, I'm going to say 10 years ago, when China stepped in and bought a lot of cobalt to the north of Zimbabwe. Is President Trump, with his foreign policy, creating a point where China has every opportunity to capture African commodity assets?
Well, let me say this. I think the Chinese investment in Africa has been welcome. The Chinese are investing everywhere, all over the world, including the purchase of U.S. Treasury bills and other investments. I think the issue is whether really African countries can negotiate better deals from themselves, transparent deals for themselves, and control the level of indebtedness that some may experience against China. But it's just an additional source of capital for Africa that is necessary. Also, you know what, in terms of global capital flowing into Africa, Africa cannot expect as much foreign aid to flow to Africa as taxpayers in the U.S., everywhere in Europe, are also put under pressure by the economic pressures. So any investment from China is welcome into Africa, but Africa must negotiate better deals for itself and get a fairer deal for any investment in any sector.
But, Minister, overall, do you worry about a significant slowdown in China?
Not a significant slowdown. Our prognosis, like everyone else, is that growth will slow down to about 6.5%, certainly not below 6%. That is still adequate to support the flow of investment into Africa and to support global commodity prices, at least the ones that impact Africa. So I'm not yet worried about that slowdown in China.
Okay, Minister, I want you to sit there. I don't want you to get up with your team and exit right now, because we're going to do what we call the single best chart. And in honor of you, we're going to logarithms. We usually don't do that. But since you're here, we're going to logarithms. Peter Hooper, you know the chart well. This is the Bloomberg Dollar Index. It's a blended index capturing in much of EM dynamics as well, with a big 2014 move. And then up we go over here, and then up we go to some points of stability, a peak. And I think, Peter, this really caught a lot of people by surprise, this dollar weakness. We talked about this before, but it's a two-part dollar call by Deutsche Bank. What does it mean for EM and for Zimbabwe?
Well, this, as you extend this chart going forward, I mean, our sense is the dollar is going to continue to weaken against the major advanced economy currencies. Against the EM, which are sensitive to this Fed tightening, you're going to see things going the other way. I think the dollar will turn around and go up against the EM.
I mean, within this is the EM response. Institutionally, how does the EM respond? Do you do that at the Bali meetings with Madame Lagarde?
Well, at the Bali meetings, we talk broadly about the impact of macro policy on financial markets, on economies, but also on development issues. Certainly, yes, there will be some focus on the U.S., on the dollar, the monetary policy conditions globally. So any weakness in emerging markets is always going to cause trouble, especially, as we said, in Argentina, Turkey, South Africa, to mention a few, that obviously will cause some concern for institutions such as the IMF.
Francine?
Yeah, Minister, I wanted to come back just to trade tensions. If there was a trade war, so an escalation of the trade tension between the U.S. and China, what impact would it have on Zimbabwe and the region overall? Would it lead to more inflation or would it be deflationary?
Well, trade tensions between the U.S. and whoever, China or Europe, certainly will have some impact, but not a big impact in my view. Some of the work we have done, in fact, shows that some of the import bans are, in fact, are going to boost U.S. growth, which is strange, by the way. But a lot of research has been done to show that. And the stronger U.S. is also good for commodities. Which Africa cares about. So in terms of impact, that's really going to be muted. Of course, Africa worries about the survival of AGOA, which gives African countries, in terms of exports in the U.S., good terms to export to the U.S. So that's really will be the fear for us. But so far, AGOA has not been threatened. And thank you for that. Thank you to the U.S. for that. Please don't do anything about AGOA. On the contrary, I'm pitching that you must give us even easier terms. Africa is only a small economy. It doesn't threaten the U.S. at all. It is not as large as Europe or China or anyone else. So please do nothing about AGOA. On the contrary, expand it.